Hello ladies and gentlemen, I just wanted to start by saying thank you so much for watching this very special and short once-in-a-lifetime institutional trading webinar. This is truly the only opportunity you'll ever get to see firsthand how one of the biggest investment banks in the world, where I spent several years working, approaches trading and how it's completely the opposite of what you're doing on your retail chart. Now it gets better, it's the only credible trading webinar in the world that's actually backed up by 100% independently audited trading statistics that you can actually access for yourself. Name me one other single trading educator in the world, even one, who shows any independent evidence they actually trade for a living. You won't be able to find anyone because you and I both know retail trading educators do not trade for a living. They simply make money from you selling you worthless education based on random technical analysis lines that are little more than glorified gambling. You'll never find any independently audited evidence that any of those random lines on your chart work, because they don't, and banks and institutions don't use any of that junk. I know, I work there, and that's why by the end of this short webinar, I'm going to make sure that anyone who puts in the time to watch this incredible insight into how banks and institutions actually trade is then in a position to start using the same professional tools I use to produce my verified trading stats. Now, as you can see in today's incredible agenda, the majority of this webinar is about you. I'm going to show you using some amazing real-life trading examples taken directly from my audited trade list, exactly how you can start to use the same institutional tools that I was taught about and was using at banks and institutions where I worked. Things such as the volume profile and the footprint that you see here, the exact tools I use to produce my audited returns that no other trading educator in the world is able to produce. And that's the best part about this webinar, complete game changer. I'm actually going to show you today how for free, absolutely zero cost, how you can get your hands on the best footprint tool in the market and for the first time start to actually see inside your candlestick at exactly what banks and institutions are doing. And you're going to be shocked when you see for yourself that most of the time professional traders like myself inside banks and institutions are doing the exact opposite to what you're doing on your retail chart. Now, before we begin, as you can see at the start of the agenda, I actually feel it's very important that I spend just a few minutes earning your time, earning your respect, and also earning your confidence that what I'm going to show you today is going to completely change your perspective on trading forever. I understand for many of you, all you've ever known is what you've been told on YouTube and other social media channels by retail educators. And if I'm going to now come along and tell you it's all complete rubbish, technical analysis and all those random lines are completely useless, no serious traders in banks and institutions like the ones I used to work for are using them, I'd better be able to back that up, right? So let's do that, and then we can get on with the main part of the webinar. So here you can see my 100% independently audited verified returns using my FX book, the gold standard in audited trader performance. I'm also using IC Markets, one of the largest trading brokers in the world, to ensure integrity. Now in this particular month, I made around 60% return with 2% drawdown. I'm just going to repeat that, 2% drawdown. You will not find a return to drawdown profile like that anywhere in the world. And if you've seen trading statistics before, you'll already know that. I took a $15,000 account to around $25,000 in just 1 month using full standard lots. Here you can see some of my trading history. You'll get full access to this at the end. As you can see, at times I was trading 20, 30, 40 pounds a tick and still kept my drawdown extremely minimal. Point being, I put my money where my mouth is, day in, day out, week in, week out, all independently verified. No one in the world is showing this stuff because verified returns in retail trading don't exist. You're now looking at institutional trading where results actually matter, completely different ballgame. Now it gets even better. At the end of this webinar, I'll give you the link with direct access to these audited stats. All you need is an internet connection. Check them out later in your own time, scrutinize them, drill into them as much as you wish. It's important that you have the confidence that you're listening to someone who knows this business inside out. Now, not only have I got this particular month there, I also have a full year's worth of results that you can check out where I'm consistently producing these type of returns with low drawdown every single month. And as you may know, I'm even running a competition where I've offered £25,000 of my own personal cash, life-changing amounts of money to anyone to show me a single trading educator in the world who's showing this stuff, and I've never had a single credible entry in the entire time I've run this competition. Now think about how significant the fact I've never had a single credible entry is. Has anyone who's told you to use retail junk like technical analysis or asks you to stick random trend lines or Fibonacci's on your chart ever showed you any independent evidence such as this, that what they're telling you to do produces consistent returns? Absolutely not. And if they have, send it to me and I'll personally write you a check for £25,000. That's almost $35,000. I think we both know that's not going to happen. So look, final question before we move on then, and I think this table is going to resonate with almost everyone watching this. Be honest with yourself. This is you currently. You're listening to people on YouTube, social media who show no independent evidence whatsoever that they make any money trading. They have no professional background working in a bank and therefore no clue what it means to be a professional trader, and worse, are using no professional tools. Instead, they're teaching you to use random lines that, be honest, any child could use. I think it's very fair then for me to ask you to pause this video for just one moment and to ask you to think long and hard. What is it? What is it exactly you're hoping to achieve out of following, or worse, paying these people? Can you see by following people who don't even meet the most basic criteria, you're not serious about this? You're gambling, pure and simple. You are gambling. It might look more sophisticated because you have a chart with some fancy lines, but ultimately it's just glorified gambling. You will fail, and with all due respect, you can't blame anyone because you haven't even done the most basic due diligence. But here's your opportunity to change that. You know, is it any surprise that professional traders working in banks and institutions who do this for a living and consistently produce the sort of verified returns I'm showing, they didn't learn from retail educators. They learned by following other institutional traders who also have audited track records, who have also spent time working on some of the biggest trading floors in the world, and finally are using the proper tools based on audited evidence. They actually work. You know, you don't need me to tell you that that is what is going to result in you finding success, not doing the opposite. Now, this is so obvious, right? I don't even need to spell this out for you because it is obvious that what you see here on your left is gambling, pure and simple. But it amazes me how many people fall for this stuff over and over and then wonder why they're getting nowhere with their trading. So take this opportunity you're being given today to break out of that cycle and get on the same path that banks have their traders on, that I was put on by my bank, and that I'm now going to put you on today. Now, this is my public LinkedIn profile. I'll give you the link for this at the end. I have over 500 professional connections here. And as you can see, I spent several years working in the center of the trading floor at one of the biggest investment banks in the world. I was regularly dealing directly with huge central banks, such as the Bank of England and the European Central Bank, facilitating trades for them. I also worked with some of the biggest hedge funds in Europe. At one stage, the team I worked with controlled over 10% of the global foreign exchange market. We're talking hundreds of millions of dollars flowing through my desk every day. So I know a thing or two about trading, right? And you're going to be absolutely shocked when you see for yourself that what banks and institutions are using to trade is completely the opposite to the nonsense you're being told by retail educators on places like YouTube and other social media channels. Now, as you can see on this table, in all my years working in both investment banking and with some of the biggest players in the world, I never saw junk like technical analysis being used. You can see that for yourself. Yes, different institutional players have different goals, but ultimately they're in this business to make money. They're not here to have fun and gamble using meaningless lines on their chart. As you can see, these are serious players controlling 99% of the marketplace. They are the market, and the one thing they have in common is that they're looking at order flow, right? Investment banks, order flow. Hedge funds, order flow. Prop firms, order flow. 99% of the market, order flow. Things like volume profile and the footprint, which I'm going to show you, absolutely no technical analysis in sight. And then on the completely opposite spectrum, there's you. Less than 1% of the market using what none of the big players are using. Can you see you're in serious trouble if you continue going down that path? If you want to continue trading using methods such as technical analysis and candlestick patterns that are the complete opposite to what the entire marketplace is doing and you still think you're going to be successful, with all due respect, I'd highly suggest for your own benefit, seriously consider if this is the right business for you. These firms will crush you in a heartbeat, and I'm saying that to genuinely help you, to save you going round in circles for years, wasting your money, right? If these people are 99% of the marketplace, you need to be doing what these people are doing, not the complete opposite. Copy them. That's the smart thing to do, right? Now, to do that, you need professional tools. The same tools I was taught to use during my time working at a bank on one of the biggest trading floors in the world, and that I've continued using as a private trader to produce my verified results. Things such as the depth of market, the footprint and volume profile, which you see here. As you saw in the previous slide, never met a professional trader in the world who doesn't use these tools or something similar. And without them, you have no hope, right? Zero hope of succeeding in trading, but that's why we're here today. Now, I promised you that you could get these tools completely free for life and actually start using them today, but I don't want to just throw these tools at you off the bat. I want you to really understand why banks and institutions are using them and why they're not using any of the stuff I see in retail. But to do that, you really need to think about why price actually moves, okay? And what price actually is. Have you ever stopped and thought about what that price you see going up and down on your chart or that you're trading actually represents? You know, what are these things you're actually trading? What is Forex? What is an equity? What is a cryptocurrency? What is a commodity? Well, they're all assets, right? The pound, for example, it's an asset. When you're trading Forex, you're buying an asset. It has a value or a price, right? When you buy crypto or stocks, you own it, right? It can be held, and then if you want, you can sell it for a profit or a loss. Now, you might think this is pretty obvious, but for whatever reason, people forget. This is no different to any good or service in the real world. You can do the same with anything. Take an iPhone or a television, for example. We all have one of these items. If you buy an iPhone, would you agree? You own it, you can hold on to it, or you can sell it for a profit. It has a price, right? And if you wanted, you could plot the iPhone price over time on a chart. Can you see there's no difference between a real world asset like an iPhone or even a television and the things you're buying and selling on your chart? You absolutely have to understand this concept, or you do not understand trading. This concept is so crucial and the very cornerstone of not only how banks and institutions operate when trading, but how every business in the world operates. So how do banks and institutions use this concept to trade? Well, let's take an iPhone, for example. Let's say you decide to get into the iPhone business tomorrow. It could easily be televisions, it could be shoes, it could be clothes, it could even be property. They're all assets that have a price, can be held, can be bought or sold. But let's say it's the iPhone business for the sake of an example. Let's compare that to a trading business, trading Forex, for example. Again, it could easily be stocks, crypto, commodities, but just as an example, let's say it's a Forex business so we can compare the two. What's the most important pieces of information you need when you run a business, whether you're buying and selling Forex, i.e. running a Forex business, or buying and selling iPhones, i.e. running an iPhone business? Well, we already established that they're both assets, right? Can be bought, can be sold, have a price, no difference. Could just as easily be called item A and item B, who cares? So to know if we have a viable business, would you agree? We need to know how much we can get these items for now, i.e. the cost, and how much we can sell them for in the future, i.e. the fair price. The difference is the profit or loss, right? Pretty obvious. So let's fill in these boxes. How much can we get these assets for now? What's the cost? Well, with Forex, we can just look at our chart. The cost is, it's just the current price, right? Let's say for argument's sake, our Forex business focuses mainly on GBP USD and the price on my chart for GBP USD is 141.00. This is my cost price of this asset. Let's put that in the box. I still don't know how much I can sell GBP USD for in the future, but we'll come back to that. What about the cost price for iPhones for our iPhone business? Well, let's say I ring some iPhone dealers or contacts abroad and I'm able to source them for $800 if I buy them in bulk, right? So I now have a supply of iPhones at $800. That's my cost, right? Just like I have a supply of GBP USD at 141.00. I now know how much these items cost, but the problem is I don't know how much I can sell these items or assets for in the future So I don't know if I have a Forex or an iPhone business. So now I need to figure out what the fair price is, i.e. the price I might be able to sell my GBP USD or my iPhones for in the future, right? That's how business works. Would you agree? If I can sell my iPhones for more than $800, I have a business. If I can sell my GBP USD for more than 141.00, I have a Forex trading business, right? Otherwise, I have no business. So let's start with iPhones. How can I work out what the fair price of iPhones is, i.e. the price I might be able to sell my inventory or stock in the future, to see if we can actually make a profit? Should I get out some technical indicators on iPhone prices, draw some trend lines of where iPhone prices have been, or get out a Fibonacci and see where iPhone prices are likely to bounce, right? If you're in the property business, you buy and sell property, which we just agreed, right? It's no different to trading Forex, crypto, equity, and so on. It's just an asset. Are you going to speak to your estate agent and tell him, no, I think the fair price for this property is lower because that's the 61.8 retracement, or the RSI of property prices is overbought? Of course not, right? Completely ridiculous, right? You would never ever dream of running any serious business like that, or you'd not only be a laughing stock, but you'd have a business disaster on your hands, a failed business. Now you might be laughing thinking, of course I wouldn't run a business like that. That's ridiculous. So, well then, why are you running your Forex, equity, or even crypto trading business like that and then expecting anything more than a disaster, a total business failure? So what should you be doing? Well, let's go back to the iPhone example. To get the fair price of iPhones, or to see where we might be able to sell our stock in the future, would you agree? You're going to go on a site like eBay and see exactly what people have been paying for iPhones recently, right? You would check the listings or the sold listings. If you were in the property business, you would go and check for other property listings or sales and see what others are willing to pay for similar properties, right? Basic business. Now, think about it. If we plotted the price of an iPhone on the x-axis and the quantity being bought on eBay on the y-axis, what we'd probably find is, as we searched all the listings, would you agree? Most people say 90% would have paid around $1,000, right? Let's say we counted it as we went through the listings and plotted it on a chart. Hundreds, if not thousands of people, if we counted them and plotted it, would have paid around $1,000. A few people might have paid more, which we can plot the quantity of, and a few people might have got lucky and paid slightly less, and then barely anyone as we move further and further away, either side from $1,000. Now, if we join all these quantities together, this allows us to see a profile of what the fair price for iPhones is, right? This is a volume profile, and whether you realize it or not, it's what every business in the world is doing, trying to figure out at what price they can sell their products or services for by looking and researching what demand is like at different prices. Now, in this instance, we can see the fair price of the iPhone is about $1,000. So let's put that in our box. I can now see I may just have a viable business on my hands, as I could potentially make profit. If I buy at $800, I can probably sell at $1,000. $200 profit, I can now make a business or a trading decision. How is that any different to my Forex trading business? It isn't, right? Banks and institutions realize that because GBP USD, all Forex, equity, commodities, even cryptocurrencies are nothing more than assets that can be bought or sold. Just like iPhones, they need a volume profile of GBP USD. They need to know what quantity of people have bought GBP USD at different prices so they can figure out how much they can sell it for in the future. Just like we now know what price we can probably sell iPhones for in the future. So obvious, right? How can you run a Forex trading business if you don't know where you're likely to be able to offload your GBP USD asset in the future? It's simple business. Nothing to do with silly little meaningless lines on your chart. Having said that, retail charts do have some use. They tell us the cost price, but that's where their usefulness ends. They don't tell us how many people bought GBP USD or equities or crypto or whatever asset it is at different prices. You have the cost price on your retail chart, which we've written down here, 141.00, but how on earth do you know where you'll be able to offload your GBP USD asset for in the future, or wherever it is you're trading, without knowing where people are actually buying it in quantity? Would you set up a business in the real world and start buying stock without knowing where you can sell it for in the future? Of course not. So don't do the same with your trading. Just like you can see how many people were buying and selling iPhones at different prices, and that helped you make a trading or business decision, banks and institutions are using order flow to do the same with Forex or equities or commodities or even crypto. The depth of market, very similar to eBay, is simply the raw data and tells us how many people, or more specifically, GBP USD contracts have been bought and sold at individual prices. The footprint simply allows us to digest information on the DOM or the raw data in a more easily readable format. You can now easily see exactly how many people have bought and sold at each price. Now it gets even better. Imagine you could have a volume profile of GBP USD, just like we had a volume profile of the iPhone. Well, you can, right? If I squash my footprint a little so we can see more of the chart, can you see I've added a volume profile here on the right? Simply shows a nice summary of how much was bought and sold at each price, same as the iPhone profile, except now it's for the pound. And all banks and institutions do is they flip the profile so it can be easily read on a chart. Amazing, right? You now have enough information to run a trading business, and you can make proper business decisions because you can estimate the future sale price. Now, can you see this bulge in volume around 140, 150 on GBP USD, around 50 pips or ticks higher than the current price? What that means is there was heavy demand for the pound at 140, 150 very recently. Can't see that on your retail chart. The quantity bought at 140, 150 was very high. It's the equivalent of the bulge we saw at $1,000 on the iPhone profile. Can you see I now have that crucial piece of missing information I need? I now know that the fair price, or the price I can easily offload or sell GBP USD in the future, is higher at 140, 150. So let's go and fill that into our box. Now, if the cost price is currently 140, 100, I can buy it at that price right now on my chart, but thanks to volume profile and order flow, I now know the fair price is actually higher at 140, 150. I suddenly have a Forex business, and I can see I could potentially make some money. Without this information, just looking at the cost price on your retail chart, be honest, you're simply gambling, and it's worse than that. If everyone is buying GBP USD at 140, 150, and I can currently get it cheaper at 140, 100, why would I even dream of selling it at 140, 100? It would be the equivalent of selling iPhones for $800 when I could easily sell them for $1,000. You may as well donate your money to charity. Now, I'm asking this because I see retail traders do this all the time, and be honest, you've done this type of stuff yourself on your retail chart because you had no idea what the volume profile of what you were trading looks like. You don't need to take my word for it. I can actually prove it to you. Now, with the footprint, I can actually see in amazing detail what others are doing, which helps me with timing. Whereas you have a blank candlestick, you may as well be trading with a blindfold on. If we actually expand the footprint again, we can see real buyers and sellers inside our candlestick. I already know the pound is likely to gravitate towards 140, 150 based on volume profile. It's too cheap right now at 140, 100. But when should I buy it? The footprint helps me with timing because it shows me when other big players are also starting to buy aggressively. But I can even see what retail traders like you are doing. In this instance, look for yourself, the opposite, right? Selling. So when you're selling your breakout down or using your random lines to make decisions, I'm buying from you because I can see the fair price is above, whereas retail traders have no clue where the fair price is. They're basically just gambling. You know this now for yourself. You only see the cost price as we discussed before. You only have half the information. Lo and behold, a few hours later, GBP USD made its way back towards 140, 150 as institutions piled in and retailers were forced to exit their shorts. Now we'll go over a live example in a second, but just wanted to highlight that you can actually have a footprint and profile chart for almost any asset in the world. Here's one for equities, the S&P 500. Here's one for Bitcoin. Here is one for crude oil. They all tell you the fair price or the price you're likely to be able to sell your asset for in the future. You can finally fill in box number 2, which you can't do with a retail chart, and therefore you actually now have an amazing business on your hands. Now look, if you want to continue doing what you're doing, essentially gambling, I can't stop you, but you can see you're not going to get anywhere only having half the information. But if you're serious about developing a business or a career in trading, I am going to get you kitted out with every institutional tool you'll ever need. Dome, footprint, volume profile. The tools are completely free. You have nothing to lose, so there's no reason not to use them. But before I do that, let me spend no more than just a few minutes. I promise to show you a real life trading example from my independently audited trade list. It's a great opportunity for you to see how I actually use these tools in real time. So let's just pick a random trade from my audited trade list. On the 16th, I was buying the pound versus the yen, multiple full standard lots. I traded around £50 a tick. I have so much confidence in order flow and being able to see what other banks and institutions are doing. I put my own money where my mouth is, and I've shown my statements publicly. Now, what we have here is a retail chart on your left and an institutional chart on your right. And this should really open your eyes as to just how much information you're missing on your retail chart. Now, we'll discuss the differences in a second, but firstly, I just wanted to highlight that on the day in question, I did look at my retail chart on IC Markets. As you can see, this is my live account, the same one linked to my audited results. I've highlighted exactly where I bought the pound on the day in question, which you can see for yourself on the audit. And I started out by just getting a rough feel for what the market had been doing the last few days. No useless indicators needed. I can already see we were in a sort of a range, but I'd just come out of it, right? But as discussed before, what we're missing here is that key piece of information that banks and institutions recognize you can't trade without. I can see the cost price here on my retail chart, but as we've already talked about a lot, without having a profile of exactly what quantity of people have been buying GBP at different prices, I have no idea if I buy it right now, what I can sell it for later. So by now you already know, if you're just using a retail chart, you're in big trouble, right? Now, I don't know about you, but I'm running a business here. So I want to know well before I decide to buy this asset, GBP, where can I sell it later? I want to know that first, basic business. So this is where I look at volume profile for the pound and combine it with the cost price so I can see if I have an opportunity in my Forex business on this day and fill in both boxes rather than just one. Now, I actually like to look at order flow in pound versus dollar, as this is such a massive market and gives me a really good feel for where the pound should be, i.e. the fair price versus where it currently is, the cost price. Now, on your right, some of you may have already noticed, we have the volume profile chart for the pound on the exact same day, the 16th. This is what institutions are looking at, price, just like you do on a retail chart here, but on top of that, they can see exactly where others have been buying and selling. Remember the profiles we talked about before in the iPhone example, where the bulge or bulk of volume was, and therefore where there'd been a lot of interest in the past and where we're likely to gravitate back towards. Remember the $1,000 mark in the iPhones? Same thing here, but this time it's GBP. So simple. Now you can see for yourself, these are identical charts, except on my institutional chart on your right, rather than what I showed you earlier, which was volume profile for one day on the footprint. Having it in this format allows banks to simply see the volume profile for the last few days, right? Nothing complicated, just a broader picture, so even more powerful. And also another benefit is it saves me having to scrunch up my footprint chart like I did before. We will get onto the footprint in a second, which is useful for the finer details, but looking at volume profile like this allows us to see the broader picture much easier. So let's finish here first. So I have marked the area I bought on both charts. You can see identical, right? In the pound dollar, it was the equivalent of around 138.20. My cost price, which we can put into our box. Let me remove the retail chart and bring in the footprint. But before I do that, let me expand the institutional chart. So can you see now that I've expanded my institutional chart, look at where the bulges have been over the last few days. High interest in the pound around 139, so clear, right? It's the equivalent of the iPhone example where we said the fair price was $1,000, but we can get iPhones for $800 right now. Can you see the fair price of the pound is around 139? When I was buying it, the price was 138.20. We can put that into our table and see we now have the information needed to make a business decision. Now, if the fair price of the pound is 139 and you can currently buy it at 138.20, are you going to sell it? Of course not. It's suicide, but that's what retail traders do every day, and I'll show you. Let's get up the footprint for this day the 16th as promised, side by side. Can you see it's the same day, the 16th, same price, I've marked it here, 138.20. So do you agree? We know we want to buy the pound on this day as it's currently too cheap. And we know we can probably sell it higher at 139 based on volume profile, but we need to time it correctly, right? What myself and other banks and institutions are waiting for is the retail frenzy to happen. So with all due respect, we can take advantage of what retail traders like yourself are doing, the opposite to what institutions are doing. Now, it might be easier if we just widen the footprint here a little. Can you see the footprint represents this area of price here, the two lower lows on the price chart, match the two lower lows on the footprint. Hopefully that's very clear. I know I want to buy the market because I know it's too cheap and institutions are going to be buying it, but I need to time it correctly. So I'm waiting for retail traders to get excited, sell the market using their worthless indicators when they should be buying it and therefore getting trapped. Let me show you retail traders like yourself getting trapped so it's very clear and you can stop doing it. Can you see these numbers here? They're aggressive sellers. Can you see the first lower low? We didn't get that much aggression, but look at this second lower low, the breakout or some indicator driven selling. Can you see the selling frenzy is so clear, right? Negative 119 sterling contracts on the delta, real people selling very aggressively. This is retail traders getting trapped. And look below, can you see the negative 58% on the delta, whereas on the first lower low, we only had 3% negative, right? Anyone, even a beginner, can understand this. It's nothing fancy. The delta is simply the difference between the buyers and sellers. When it's negative, it's simply telling us we have more sellers than buyers. And obviously when it's extremely negative, we have an extreme amount of sellers. This is clear in the candlestick anyway. You can see here a lot of real sellers coming in. On your retail chart, you're clueless this is even happening. Now, these sellers are retail traders getting excited that the market is breaking out and they don't want to miss out on the big move. The reality is you and I know the fair price or the fair value of the pound is higher, not lower, just like the fair value of iPhones was higher at $1,000. So why on earth would you sell at $800? Well, in the same way, my question to you would be, why on earth would you sell pounds at 138.20 on this day when you can offload them at a higher price? It makes no sense, right? So how do banks take advantage of this retail behavior? Would you agree when people go short or sell the market, just as retail traders went short here, but then the market starts to reverse and go up, what do? They get very nervous. Think about it. When you sell the market and it goes against you and your P&L starts to get negative, you get nervous, right? Sweating, and you start thinking about exiting. How do you exit a short position? You buy. Let's now move forward a bit. Can you see the area where retailers sold? Myself and other institutions now recognize if the market goes above that area where retail traders have got themselves extremely short, what are they going to do if the market starts moving up against them? Retail traders are going to start sweating and want to exit like sheep, right? All in one go. Now, you don't need to take my word for it. You can see it for yourself here. Can you see as the market starts moving up from the 138.20 area where all the retail traders are short, you can see here in real time, right? Net 116 positive delta. The delta suddenly goes positive. A huge surge of buying comes in. This is no coincidence. Institutions are stepping in aggressively to drive the pound back up to fair value. And as the price moves up, this makes retail traders who have sold nervous. The same retail sellers start exiting. To exit, they need to buy, also driving the market up. This is when I start to also buy, as I can see this phenomenon happening in real time. Retail traders like you that are exiting your positions at a loss are driving my P&L up. Institutions are also on my side now, so my risk is very low, but my profit potential is very high. What more could I ask for? That's how I keep my drawdowns very tight, which you can see for yourself on my audited track record. So now you can see very clearly why I was buying pounds aggressively on this day in that area, and you can see for yourself, I'm doing this day in, day out, week in, week out, month in, month out. And no offense, but I do have days where I'll be sitting back, right, with a smile on my face, saying thank you very much to all these retail educators I see on YouTube and social media, feeding people total rubbish about how the market works with all those silly lines, because you can see for yourself, all it's doing is fueling a retail frenzy, which when it reverses, drives my P&L. Thank you very much. Now, unless you enjoy being the fuel for someone else's profits, which let's assume you don't, I can help you get on the other side, but I can't do it on my own. I need you to help yourself first. First thing is you need to change your mindset quickly, right? You need to promise yourself today, not tomorrow, today. Mark it in your diary. This is the last day you're ever going to allow yourself to be a trapped retail trader and be the fuel for other institutions' profits. There's only one way to do that. Start trading like an institution yourself. Learn to identify trapped retail traders and start being the one that's actually taking advantage and not the one that's being taken advantage of. Now, the professional tools, the identical tools used by all banks and institutions, I'm about to give you for free. So that's half the battle won. You don't need to worry about that. But you don't have a business plan. I'll give you the tools for free, but what are you going to do with them, right? You don't want to just start buying and selling. You need a plan, right? You wouldn't start any business without a business plan. So don't make the same mistake with your new trading business. So let's do a quick 2-minute business plan together of how the next few months might look like for you, so we can get you on the right path to developing an institutional career and finally being on the right side of the market. Now, I was very lucky when I landed a job as a junior on the trading floor at one of the biggest investment banks in the world. And when they started training me, I was put on a structured training program to teach me how to become a trader. And before we did anything, the first thing we did was develop a business plan. And this is how it looked. And we can even plot this on a chart of time against income potential. Now, in months 1 to 3, I was taught about institutional tools in depth, things like the footprint and depth of market, which you've seen today. No pressure to execute, just an environment where I could spend time understanding in depth how all these tools in the market actually worked. Then months 3 to 6, we worked on more advanced tools like the volume profile and the VWAP and learned how to incorporate all of these things together and start to combine them with normal charts, similar to what I've just showed you. So as you can see, regular charts were only introduced much later in the process, the complete opposite to how you're being taught in retail. It's only once we had the opportunity to bring all this stuff together did we start to execute seriously. Months 6 to 9 were spent on the simulator, bringing everything together in a trading or execution sense, and then eventually, if that went to plan, trading real money and developing a long-term career. This is exactly how any serious business trains its employees. A structured plan, yes, your profit potential is small at first because you need the space to learn, but look at the net result. Eventually you could earn money that you could only dream of, and more importantly, consistently. I know I've experienced this firsthand and you've seen my verified results. Compare that to retail trading. I wouldn't even know where to begin to do a comparison. There isn't one, right? Retail trading education is all about getting you onto the charts, executing as quickly as possible, complete madness, no business plan, no professional tools, no independently audited evidence that what they're showing you even works, just random meaningless lines. Be honest with yourself. What hope have you got of succeeding with that stuff? Zero, right? And it gets worse. Retail educators get paid when you execute. They need you to get on the chart quickly and execute so they can earn broker commissions. Disgraceful behavior. That's why they set your income expectations very high from the start. So you get excited and start executing. But what happens within 3 months, if not sooner? You fall flat or actually end up negative, losing money. You then buy another retail course, starting all over again, repeating the cycle again and again, wasting years of your life. Why not just do it properly from the start? Give yourself the space to learn the correct way using the correct institutional tools. There are no shortcuts in any business, but if you put in the work and do things the right way, no surprise, right? The rewards can be beyond anything you could ever imagine. So how can you get access to an institutional education like the one I've highlighted here and on the previous slide, the one I got at Barclays, one of the biggest investment banks in the world, and also the same as I got from some of the other firms I worked for? That's where the G7FX program comes in, which I created myself from scratch. I've brought the investment bank program that I received to you. It really is an incredible once-in-a-lifetime opportunity for you to get access to information that is simply not available to anyone outside of the institutional industry. So grab it whilst you can. As you can see here, the G7FX program replicates exactly point for point, the identical training program or business plan we just talked about that I personally received at one of the world's leading institutions that you see mapped out here in a very clear, structured path that can lead to an amazing career, generating incredible returns if you're willing to do the work. The due diligence is there. The G7FX program is backed up by the highest levels of due diligence in the world. The G7FX Foundation course covers months 1 to 3 in an institution, which we already discussed, and the Pro course covers the remainder. Everything you need, as you can see for yourself, is covered within the G7FX Pro and Foundation courses. By doing the full G7FX program, you may as well be walking into an investment bank. Now compare that to the retail equivalent, right? Without being rude, it's laughable. There is no comparison. I think you know, if you want to have any hope of succeeding in trading, this is the only option, and opportunities like this don't come around very often. You already know there is nothing like this out there, so grab it with both hands whilst it's available. So anyway, you're good to go, right? How much is the entire G7FX program, the full Pro and Foundation course that you see laid out here? Must be thousands, right? Actually, it's not, right? £279 paid in 3 installments and you're done, or £798 up front. And I'm going to repeat the price because most people are shocked and they don't believe me when they hear this. £279 paid today, and you can start the program immediately, and then 2 further installments and you're completely done, or £798 up front. That's the entire Pro and Foundation course program, everything you need from start to finish to develop an institutional trading career. The exclusive, very limited, one-time webinar coupon code is below, as is the link to my website with full details. The link is below. You won't find this coupon code anywhere. It's been generated just for you as a reward for giving up your time today, for watching the full webinar, which shows you're actually serious about this. So I want you to be able to start immediately. And it gets better. I'm giving you for life, lifetime, okay? Completely free, as promised. Every single institutional tool you'll ever need, one of the best depth of markets available, an industry-leading footprint, and the volume profile tools. You're basically getting all the institutional tools you'll ever need for life, included in the course, absolutely free. Go and try buying these tools in the open marketplace. A solid dome and footprint together will cost you £2,500 minimum. You can check for yourself. These aren't worthless retail tools. These are serious institutional tools used by the biggest players in the market, and I'm giving them to you for free. Now, why do that? Well, when I worked in a bank, I was taught how to build them myself, and I like helping people. I don't want you to spend thousands before you've even started your institutional career. Who's going to help you out like this in this industry? No one, right? And you've seen how crucial it is to have this information to succeed in this game. That's why I'm giving it to you, so you can stop wasting time on things that don't work and get going on things that do straight away. Now, believe me, I already know it's completely insane what I'm giving you at this price. All the tools you'll ever need and the full education, I'm almost giving it away. But you've seen throughout this webinar, I'm genuinely angry at how much retail educators with no evidence of trading, no professional background, are taking advantage of you by charging you thousands for worthless rubbish. I don't want to be the same, okay? Yes, I want to help people get on the right path, but I also want to do it at an affordable price. By being fair with my pricing, it makes it accessible to everyone, and that's why I do this. Having said that, I mean this honestly, no marketing fluff. You can see, I'm a professional trader with verified results. I trade for a living. I'm not a marketer, but the reality is the webinar coupon code that you'll find below has genuinely been generated just for you watching this now. You'll not find it anywhere else. I don't even know what the code is. That's why I don't mention it in this video, because it's been generated below just for you, but it will expire at some point shortly. So once you're ready, of course, take your time, make sure you're happy with everything, read through the full module list on my website. I've put the link to my website with the coupon code below, and I do have an FAQ coming up. So feel free to watch that. But once you're ready to start taking your trading seriously and you're comfortable with everything, don't delay getting started. You can see for yourself on the checkout page on my website, the full Pro and Foundation course genuinely sells for £1,298 or 3 monthly installments of £449. I currently have a deal ongoing at, I think it's £998, but because you watched this entire webinar, which tells me you're actually serious and ready to start treating this like a business, I think that deserves a reward. So I'm giving you a webinar exclusive coupon code. You should see it below. That means you can start today with a £500 discount. Now there's a very good reason. I repeated this several times. It's not to go on and on, okay? I've no interest in all of those marketing games. You've seen the quality of the information I've given you today is up there with the best. The reason I repeated the coupon code offer several times is because you genuinely wouldn't believe the amount of people I get contacting me after several days to say they can't wait to get started, but their coupon code has expired. And unfortunately, there's nothing I can do about it because I like to be fair to everyone. And I have a very strict policy about how many institutional programs and free tools I can give with such a big discount. £798, it's almost half the normal price I'm giving you today with £500 off. The tools alone are worth 5 times the price of the program. So that's why there's only a very limited number of coupon uses I allow before I take your code out of circulation. So again, please take your time, go through everything on the website. You'll see in detail the full list of modules you'll be learning, and you'll see for yourself just how incredible the program is. Make sure you're happy, but once you're ready, don't put it off because the code genuinely does expire, and obviously I want you to take advantage of the offer before it ends. It's there for a reason. And just finally, absolutely no reason not to start today. I'm one of the only people in the world to offer a full 30-day guarantee. You have nothing to lose. You can find more details about that on my website. Link is below. So no excuses, right? No excuses to carry on being one of those trapped retail traders. So the main part of the webinar is finished. You can go ahead and get started straight away, or if you want to hang around, we're going to do some quick FAQs, and I'm also going to show you some verified student results that you can see here, and then we're done. Now, before we do that, the main part of the webinar is over, as I said. I just wanted to say thank you very, very much for listening. I really appreciate it. It's amazing for me to be able to give you this once-in-a-lifetime opportunity for you to get access to the same institutional education I received that allows me to produce the sort of verified returns I've shown you today, and that no educator in the world is able to replicate, and that many of the G7 students are also now producing. I have hundreds of successful students. There are so many results I get sent to me. I can't even fit 1% of them on this slide, but this is a good representation of them. You can see solid returns with sensible drawdown. I've had students pass multiple funding challenges like FTMO, and also students building their own accounts, as you can see here, all fully verified. So if it wasn't enough seeing my verified results, here are many G7FX student results. You're not going to find any other program in the world that shows this stuff because it doesn't exist, right? I pride myself on having successful students, and you don't need to take my word for it. You can see it for yourself. Now we're almost there. I'm now going to play you a very short 60-second clip of real people who've taken the G7FX Pro and Foundation courses. Hear what students have to say so you're not just taking my word for it. We're then going to do some common FAQs. Then we're done, and you can start using your new institutional tools and begin your career. And one day, I have no doubt that you will also have similar results like these. So let's start the clip and finish with FAQs.
The G7 course has, I would say for me personally, has given me a whole new outlook on trading full stop.
This course is completely different. It's worlds apart from what I've done in the past and what I've learned anywhere online.
So the G7FX course, in terms of all the other courses that I've done previously, it's just, there's a huge gap in terms of the knowledge that's shared.
They've messaged me just to see how I'm doing, and I showed them my trader book, and they were like, oh, okay, right, better get involved then. I think one of the guys has signed up to your email account anyway. And yeah, he was trying to get me to do a video call with him to show him what I've learned. And I was just like, look, do the course. I can't, there's so much, I can't tell you, I can't even just tell you in like half an hour what to do.
Okay, that clip is just a very short clip of a handful of the hundreds of messages and videos I get sent to me from students without me even asking for them. That's why I do this. You can see for yourself with my audited results and my professional background that I already make a very good living out of trading. I don't need to do this, and especially not at the very low cost that I'm charging people for institutional education that you already know. You're not going to get anywhere else in the world. I do this because I love seeing the verified student results and also hearing from people who are completely lost and being completely misled by retail education, now finding success. Amazing feeling for me, and hopefully you become one of these students sending me your results or feedback that the education has literally been life-changing. I honestly can't wait to hear from you. Now, I know you may have questions, and if you click the link below the coupon code that will take you to my website, you'll find a comprehensive list of FAQs. Take your time, read through them. The full module list is also there for the Pro and Foundation courses. Regardless, I'm going to cover a few more common ones quickly now, but they are there on the website if you want to read over them again. So some of the most common questions I get asked are, I've never traded before, is this okay for complete beginners? Answer to that is 100% yes. In fact, often it's better if you come into this without the bad habits, right, that many people get from doing retail trading courses. Don't forget, when I started on the graduate program at Barclays Investment Bank, I'd never traded before. I was completely new to trading. I was just very lucky that I went through a structured program, as I already described to you earlier. Without that, I never would have seen the success that I have today. You're getting the same on the G7 Pro and Foundation courses, and if you've absolutely zero experience in this, same as me many years ago, you'll be absolutely fine. And anyway, look, as you're about to hear, we have some of the best support in the world, so if you get stuck on anything, you can always ask 100 times if you need to. The foundation course starts from scratch and will show you everything you need to know, including how to set up the tools from scratch. So don't worry, don't hesitate, you're covered. What about the other end of the spectrum? You know, is this okay for advanced traders? Absolutely okay. The foundation course covers an incredible amount of detail and is there to get everyone up to speed with the tools and how to set everything up, and also get a solid grounding in order flow. But once we get to the pro section and we're on the charts using things like volume profile and other more advanced techniques, the pace picks up really quickly, right? So this benefits everyone. Even if you're an experienced trader or a beginner, by the end of the foundation course and before we start the pro, I make sure everyone is at the same level. So when you hit the pro, you can really accelerate your learning regardless of your current level. It really doesn't matter. Now, I also get asked by people, how many hours per day do I need to spend on this, right? And the sort of answer is, it depends what markets you prefer trading, but I would say regardless of that, no more than 2 to 3 hours per day, and that's maximum. I do prefer trading the New York market myself, so that's afternoon time for me, but I don't sit and stare at screens all day, okay? I think that's a waste and achieves nothing. Get 1 to 2 solid hours in of trading per day, then spend another hour or so on the education. Fit it around your life, not the other way around. And anyway, at the beginning, your focus should be on education, so you can kind of make your own timetable to suit your day or your week anyway. Which leads me on to the next question. When do I get access to the course? Is it unlimited, and how can I access it? Access is immediate. Put the limited time coupon code below into the checkout. You'll be sent login details immediately. It's instant. Your trading business starts straight away. You'll have your own private portal. It's really amazing. It will remember your progress. All the tools are there for you. You have access for life. You can watch the modules as many times as you want, no limit, and on any device you like. PC, laptop, iPad, iPhone, so you can watch it on the train to work or whilst you're traveling, as long as you're not driving, of course, right? All the tools, very easy to set up. I have modules there that describe in detail how to set all the institutional tools up from scratch, even if you've never seen them before, so don't worry. And if you get stuck, you can reach out to us as many times as you need. We'll make sure you get set up. Now, we have unlimited support, okay? You're not on your own, and I'd actually find it odd if you didn't have any questions. It's perfectly normal. Now, regarding account size, for the first few months, 0, okay? You're building a business, not gambling. So start slowly. Like any sensible business, keep your capital outlay small. In fact, I would suggest 0 at first. Do the education, get on the simulator, prove the business model. Proving the business model costs you nothing. So why would you want to throw money at it until the business model is proven? Once proven, then you can start small or use one of the funding challenges you saw. Some of my students have passed if you don't want to risk your own capital. Now, finally, I promised you the link to my audited results on my FX book, and I'm also going to explain what markets you can trade using order flow. So the direct link to my MyFX book account you can find on my website. Click the link below the coupon code to go to my website. If you scroll to the bottom of the FAQs, it's there. Very clear, you can access it directly. Now, on my website, again in the FAQ section, you'll also see links to my LinkedIn profile, my YouTube channel, so you can watch more institutional trading videos, and also my Instagram channel, where I have one of the fastest growing institutional followings in the world. So feel free to follow me there. Now, finally, I'm just going to talk about what markets you can trade, and then we're done. As I said before, I actually mainly trade markets like the S&P 500 and crude oil using futures contracts where there's a huge amount of visible volume. In fact, about 90% of my trading is done directly on the futures market, and this is an actual month of my trading on the futures market. You can see very similar drawdown statistics to what I do in FX, except this was all done on the S&P 500 and crude oil market. So those are the markets I actually like to focus on. I actually only did the MyFX book independent audit for 1 year because I felt it was important that, unlike retail educators who don't actually trade for a living, I actually back up what I say with independent evidence it works. And unfortunately, futures brokers don't allow you to link a futures account to an independent audit site like MyFX book. So I was happy to do it on GBP on a retail account just to get something out there that could be independently verified. So again, the point is almost all markets can be traded using order flow. I do focus on the S&P 500 and crude oil and a little bit on the pound. But as you saw, I showed you order flow on almost all markets in the world. Forex, equities, commodities, and even crypto, right? You can start your trading business in almost any market. So hopefully that answers your questions. I really enjoyed putting this webinar together. I hope you found it valuable. If there's anything, no matter how small, you're unsure about, or you have any questions, please don't hesitate to email us at envy@g7fx.com. We'll be more than happy to answer. Otherwise, just a final reminder before I leave you, there's a very limited time webinar coupon code that's been generated just for you that you can use to get a £500 discount today. So for £798, you get everything, the full education on every institutional tool you'll ever need. Head over to the website, the link is below. Check out all the modules you'll be learning, check out the comprehensive FAQs. I already know there's nothing like it in the world. And once you're happy, don't delay. You can put the coupon code into the checkout, it will apply the discount. Start getting your trading business on the correct path and let me know how you're getting on as you progress. I really genuinely look forward to hearing about your progress, how you're getting on with the dome and footprint to identify trapped retail traders rather than being one yourself, right? And also how it's opened up your eyes, just like it has for all my other students. Look, any questions, email us, envy@g7fx.com. More than happy to help. Otherwise, have a wonderful day. I really look forward to seeing you on the other side.